Now, we're very honoured to have our speaker from Brisbane tonight join us online. It is Mr. Alan Oliver. Now, Alan says that he's a self-taught trader, trading independently with his own funds since 1989. He's had a few hiccups along the way, but good traders benefit from those hiccups and just go on to great things. And with Alan's knowledge of Fibonacci and Gann, we know he's gone on to great things. So please make Alan Oliver welcome. Thank you.
Thank you, Paul. I really appreciate that, mate. Thank you very much. I'm just going to have to excuse me a little bit. I'm just getting over a throat bug, but I'm pretty sure we'll be fine. Thank you so much for the invitation. I love doing these presentations. If you can give people just a very basic overview of one of the world's greatest traders, there might be just one little thing in this whole presentation that gives you something to have a look at and something that you can perhaps work on. This material for me has been life-changing. And as Robert said, I basically have started from scratch and really worked, made a lot of mistakes along the way, as anybody does. I was working for a couple of banks, and they stopped needing branch managers and they didn't need all that sort of stuff. We could see that the banking system was contracting, so quite a lot of us exited the system and we went on to do our own thing. I was just very lucky that I found trading as a path for me to be able to sustain an income. What I'm going to do today is to take you through some examples of some of the trading that I do using some of these fabulous Gann tools. But of course, nothing in this presentation is a recommendation to buy or sell any market. And obviously, it's up to each and every one of us to do our own research, and if in doubt, stay out. That's always been my motto. If you don't like the book, close it. So basically, what we need to do is to be prepared to take responsibility for our actions. And if you don't do that, you're never going to progress. You will never get any better. It's always easy to blame somebody else for something that went wrong. What we've got to do is understand that we are in charge of our own destiny, and we just need to continue to progress and work. As I mentioned, I've been doing this since 1989, and it was a direct result of ANZ Bank actually giving me some staff shares as a bonus one year. I think they're about $2 a share from memory. They gave me these shares and I started to play around with the market. I was very, very lucky in 1989 because we had the 87 crash. And of course, the market was in a recovery mode and anything you bought just went up. So it was dumb luck. It was beginner's luck. And I soon learned that you're going to have to get a lot smarter if you want to make this as a profession or an occupation. So there was a kind of an interesting start, but I soon learned that this is not throwing darts at a dartboard. Over the years, I've worked for a couple of education companies in Australia as a mentor. The last one was Safety in the Market, who closed down, I think, just after 2000. But I really enjoyed the process of helping other people to learn how to trade successfully. And some of Sidham's clients actually followed me across and asked me if I would train them individually, and the whole process just got out of proportion from there. I love the Fibonacci series in combination with Gann, and I ended up writing a book called Trading with the Gods, which was an elementary version of what the Fibonacci series means to trading in the markets. And for some reason, it just seemed to click. And I think more than anything else, it was just that the explanations were simple, basic, step by step. And people could understand that. I'm not trying to tell people how good I am. I'm just simply trying to show you that these tools work. And ever since then, of course, I trade my own money. These days, with the current market situation, I tend to be shorter term. I still buy long term, but I have a lot of fun trading CFDs on a short term basis. I might hold a position for 2 to 3 hours to 2 to 3 days, and then I'll close that position for a profit, turn around, walk away, and look for the next opportunity. I still do buy long term for superannuation, but the majority of my trading these days is short term. What we're going to look at tonight is, and through the research that I've done, the work that W.D.Gann did was outstanding, and it's still ahead of its time. A lot of the things that he was doing, we're still struggling to understand it. Unfortunately, in his day, his works and his writings were coded, and that was primarily because he knew there were people who were taking his material and were selling it at exorbitant sums and not offering people any support with it when they didn't know what they were doing in the first place. Gann was a child of a very large, poor family from Texas. He used to walk a couple of miles to school every day. He got a job on a train selling newspapers. And it was during this process of selling papers, he'd be listening to business people on the train, and he started to recognize that some of the numbers that stock traders were talking about were numbers that he had heard in the Bible when his mother was teaching him to read. So it became a progress here that he started to think that the Bible had a context in financial terms. And of course, this started a wealth of journey of education and exploration that he just continued to go through. In 1903, Gann moved to New York and actually became a broker and was a very, very well-established broker. He started to create forecasts for markets, which to this day is extremely difficult to replicate. I don't know, I'm not saying it can't be done, but I'm not aware of anyone who's been able to replicate that complete forecasting experience that Gann actually produced. And he sold, a beginning of the year, he would sell these forecasts, make a lot of money out of it. And obviously he's not going to give the formula away because it would have denied himself an income. But what was really interesting here from my point of view was that Wyckoff observed in October 1909. Now, Wyckoff actually created a trading newspaper, which later on became the Wall Street Journal. And Wyckoff sent a detective to follow Gann around to see whether the rumor was in fact true or if it was just hype. Now, the detective came back and reported that he witnessed 286 trades that Gann put on into the market. 264 of those trades were wins. So we're talking about a 92% success rate, which even to this day is still an outstanding number. And Gann just continued to work. And the one thing that I really got to appreciate from Gann's work is that even up to the point of where he became seriously ill with stomach cancer and died in 1955, he was still exploring and pulling charts apart. He was still researching. And I think that really holds out a leaf that it's always going to be a journey. And to me, that's fabulous because what we need to do is to keep our brains active. And I can't imagine a better way of doing it. Gann's work here in the stock markets was, as I mentioned, unparalleled. And at one point, he spent 3 years, 7 days a week in the British Museum in London, transferring the history of wheat prices over 1,000 years and hand charting that. There was no software packages, there was no computers, there was no internet, no mobile phones. Everything had to be done by hand. All of the calculations, the timing, the pricing, all of that stuff had to be done manually. And 3 years solid, 7 days a week. And obviously the results come from that. And the thing that I took from that is that if you want to put the time and the effort in, then certainly the results are available. It's just a case of continuing to work. And Gann absolutely did that. Now, he wrote more than half a dozen books and several courses. And in some of these books, he continued to repeat the same point. Some of these points we're going to look at today, and I'm going to try and make them, as I always try and do, as simple and as basic as possible so that we can understand the message he was making. The first thing that he said, and he repeated in just about every book, is the 50% level between a high and a low is absolutely crucial. When Alan was looking at Bitcoin earlier, we're going to have a look at Bitcoin on a slightly different time frame, and you're going to see the 50% blinding and creating major reversals in Bitcoin and opening up fantastic opportunities for $6,000, $8,000, $10,000 profits in literally hours from the 50% level. Gann also told us that time is more important than price. Now, that for me was a real revelation because primarily I know how good the price system is and I know how well markets react to price. But to say that time is more important than price, well, that just needed more investigation. One of the other things that Gann continued to repeat was the number 144. And in fact, he said the 144 factor was his greatest discovery in trading. Now, that was at a very early point. But we're going to have a look at the number 144 in today's markets, and we're going to see why he said at one point it was his greatest discovery in trading. And as I mentioned earlier, he was producing and selling market forecasts of what he thought the market was going to do in the next 12 months. The forecast that using this particular method, which I'm going to come out right now and say it's what I think the method was. I have no way of verifying it or confirming it. But what you will see is how accurate that particular forecast was for this year. And I'm going to take you a little bit step further into next year to give you a couple of pointers to look for next year. So he said if you have the right starting point, you can forecast a market 1,000 years in advance. And that's simply because all markets do is repeat. They do not do anything different. They do not do anything new. As Gann stated from the Bible, there is nothing new under the sun. That which has been will be again. So we're going to have a look at that and see how we can use that or start to maybe consider using it when we're actually trading. Before we start, I just wanted to recap and make sure that we're all familiar with the Fibonacci series. Because the Fibonacci series is in itself a natural harmonic phenomenon. Numbers exist, whether you are aware of it or even appreciate it. The fact is that the numbers are there. And just a couple of quick examples, just so that we know exactly what we're talking about. If we take the human arm, for example, from fingertip to elbow and call that 1 or a measurement of 1, then you can see the distance from the elbow to the wrist is the harmonic ratio of 61/8. And from the wrist to the fingertips is the harmonic ratio of 38/2. So that is the golden harmonic ratio. In trading, we use the 23.6 and we use the 76.4, but we have these ratios between a major top and a major bottom. And we look at these ratios as support and resistance levels. And you'll be surprised at the number of times that markets react to these things, sometimes to the cent, and then create magic reversals from them. If you have a look on the right-hand side, the X-ray of a hand, this also just demonstrates clearly the Fibonacci series, and that is simply that you add the two numbers together to get the next number in the sequence. So we've color-coded the bones inside the human hand. 2 plus 3 equals 5, which is the distance of the next bone. And 3 plus 5 equals 8, which is the distance of the next bone. So that's where the Fibonacci numbers are coming from, and we're going to be looking at that a lot in some of the charts and some of the examples that we're going to look at today. Now, Gann wrote some fabulous books, but honestly, they're a slog. because the markets that he wrote about and the trading that he was discussing is long gone. Some of these companies haven't existed for over 50 years. Some of these markets have disappeared. I think to be able to successfully understand what he's saying, you need to have the data and the explanation of the trades within that data. Now, I've been very, very lucky that Gann did a major piece on United States Steel, and a good friend of mine found the data over the last 100 years for United States Steel, and you could sit there and you could plot the charts, the trades on the chart, and see exactly what Gann was doing. This was the really interesting thing for me very early in this piece, when on page 36 in How to Make Profits in Commodities, he basically said, the wider the range and the longer the time period, the more important is the halfway point, or the 50% level, when it is reached. You can make a fortune by following this one rule alone. Now, I'm just going to repeat that. You can make a fortune by following this one rule alone. So what he's telling you is that you must know where the halfway point is between any major top and any major bottom in any market and in any time frame. He goes on to say a careful study and a review of past movements in any commodity will prove to you beyond doubt that this rule works and you can make money following it. So, having said that, let's have a look. Now, I could have chosen any market. It doesn't matter which market you look at. I don't care whether it's an Australian stock, whether it's a foreign exchange, whether it's a crypto, whether it's a commodity or a currency. You know where the 50% level is because it will pay off. Now, Life 360, I've never traded this stock. I've only seen it in newspaper reports. I think it's a stock that is involved with electronic communications with phones for parental supervision, but I might be wrong on that, but I think that's what it does. But what we can see on the chart, that is, it made a major low here in 2022 at a price of $2.40, and the stock started to find a very strong upward trend until we get to a major high price here in 2024, where the stock started trading around $27. So we've had a serious rally here from $2.40 to $27 is a phenomenal rise. And then, of course, profit taking comes through, as it will always do. There will always be people who are selling when others are buying and vice versa. And some traders have got a huge profit on the table, and they'll want to take that profit off and perhaps use it to invest in other areas. If you have a look at the yearly low for this year, 2025, the market's priced at $14.80. That is the halfway point between the 2024 high and the 2022 low. And it came down to that point almost within a cent or two, and then immediately reversed, and it went from $14.80, and it has now been as high as nearly 56. We've had a 270% increase in the value of the stock after it found support on the 50% level. And this is exactly what Gann was telling us. So no matter what market you look at, no matter what time frame you look at, know where the halfway point is, because things like this will continue to recur with or without you. It's just there. It's a habit the market loves to repeat. This is the US dollar, Canadian dollar. This is the daily chart. I'm going back to a major low that occurred here September 2024 at around 1.3420. And as you can see, prices rose up to a peak at 147.93. As soon as the market shows any sign of weakness, as soon as the puff is starting to come out of it, and there'll be different ways that you can find that. You might be using the MACD, the CCI, the RSI, the stochastic, whatever tool that you see. that tells you that the market is showing signs of exhaustion after a significant run, that's when you need to find the 50% as a minimum, because this will produce an opportunity at some point. Now you can see we've got the other Fibonacci ratios here, the 23.6, the 38.2, the 61.8, and the 76.4. But because we're looking at the 50% level, I just want to point this guy out to you here, which occurred in November and December this month. The halfway point in a $1 billion a day market. There are billions of dollars every single day as exporters, importers are exchanging currencies. This massive market produced a double top at the 50% level, halfway between the major peak and the major low. Now, if you're in that market long, that's a warning sign. If you don't have a position, that's a potential short. But we know why the market's reversing at 141, because it's at the 50% level. Now, we were just talking about Bitcoin before, and following on from that discussion earlier, where Bitcoin got to a high peak of 126,000, I like to break it down to a 4-hourly chart. And the reason that I do that is that it allows me to split the world trading sessions in probably a little bit more even rather than looking at a single daily chart. So by looking at 4 hours, I'm getting to see the US session, the European session, the Asian session, and it just gives me a little bit of a feel for it. But what you can see happen from 126, Bitcoin went all the way down to just below 104. Now, at this point, I'm putting my Fibonacci retracement tool on it because we're in a downtrend. Here are my Fibonacci ratios. Here's the 50% level, and Bitcoin got to around 115, which is halfway between the 126,000 top and the $103,000 bottom, and it's putting in lower top, lower bottom swings. That market is going to decline. If a market reacts to the 50% level like that, a double top, and then it starts to put in lower top, lower bottom swings, there's no way, as an individual trader, I am going to hold a long position against that signal. And you can see through here that it continued from 116 and it dropped to 106 within the space of about 2 or 3 days from the 50% level. So the top came in at 116. Let's look at the next leg. At 116,000 with the double top at the previous 50% level, the market continued its decline, breaking through the previous low, so we're going to hit a new low. And at this particular point, it produced a low about 99,000 and came back and retested it. Now at that point, I know that the short position is now likely to come under duress. There's going to be some kind of a rally. And the rally went up to the 50% level, halfway between the previous top and the previous low. And at 107,000, Bitcoin turned around and started to decline. Exactly the same way it did in the first leg, but it's done it at the 50% level, which is why Gann kept saying, you must know where the 50% level is. If we look at the third leg that we've just gone through, we had our previous peak at 108. We've got down just above 80. The market was in a clear decline. Then all of a sudden we start to see higher top, higher bottom swings, which tells me there are buyers back in the market. I'm going to let you look and see where this current peak has been blocked. It's at 94,000, which is halfway between the top at 108 and the low here at 80. And in fact, today it went back and retested that. And as I think it dropped below 90, I just can't remember. I looked at it a couple of hours ago, but it went back to the 50% level and rejected it again. Now, it depends on the time frame that you want to be in the market. But if you can see that the market here at Bitcoin is refusing to cross 94, and all of a sudden it starts breaking lower lows through here, this tells me this market's going down, 94 to 88. Well, that's $6,000 in literally 24, 48 hours. And it opens up some fantastic opportunities for us. But the key here is Gann's clue of the 50% level is working in a market that did not even exist when Gann was trading in 1950. So it just proves that the theory is valid. So now that we've seen what he's talking about, we've seen how good the 50% level is, now he's saying that time is more important than price. And I did struggle with this for quite a while. I thought I've got to do more work on this. I've got to understand what this brilliant trader was saying. And what we're going to do is to have a look at Gann's May soybeans chart. Now, this is the holy grail for Gann traders. Everybody who's ever done any study into Gann's work has pulled this chart apart. There's a lot of hidden clues here, and I wish I had time to go through them, but we won't have time today. But there's a lot of things here that are under the radar that are really incredibly powerful signals. But what I've just shown you here is that he waited for major tops and major bottoms to come in, and then he simply started a time count: 4, 8, 12, 16, 20, 24. The grid paper that he was drawing his charts on were all squares, and there were lines going through, time counts going through. But what it enabled him to do is to use geometry in his trading, and we will touch on that a little bit later on. But you can see here that all he was simply doing was maintaining a count from major tops and major bottoms and looking to see what happens at particular numbers that he knew had a propensity to change the trend or the direction of the market. On the British pound US dollar, which again, we're talking billions and billions of dollars every single day are changing hands. Major low at the beginning of 2025, and we had our important peak here just before July this year. As soon as I see the markets under duress, the Fibonacci tool goes on, and I'm looking for support or resistance around these levels. Remember that 61.8 and 38.2 are the natural harmonic levels. That's the natural Fibonacci levels. The 50% is the Gann level. If we were to maintain a time count exactly the same way that Gann did from these major turning points, from this low, this top, this top, this top, and this low, what you would have noticed is that from this low to this low, which is the 1st of August, is exactly 144 trading days between low to low. And this is exactly what Gann was saying. When he was looking at his charts, this number just kept popping up time and time and time again, so often that he made a special mention of it to look for the number 144. The number 144, by the way, is in the Bible many times. But you can see through here, the 144 count from the low, 13 January to 1st of August, is sitting on the harmonic ratio at 38.2%, at a price level at 131.43, and the market goes instantly up to 136. There's 300 or 400 pips straight up from a price and time conjunction. And he's saying that the time factor is more important. Let's have a look at a stock. This is Google Alphabet. And as you can see, I've simply drawn the Fibonacci ratio from the major low, October 2022, to the recent major peak it produced in 2025. Again, I've just got the Fibonacci ratio. I've just got these levels. I'm looking for support and resistance. I'm looking for my favorite patterns. I'm looking for time counts. I'm looking for trend line angles, those sorts of things. What you'll notice here, the halfway point between the two is 146. Now, if we look at the previous low, which occurred here in September 2024, it's a double bottom low. But the great thing about the double bottom low is it's 144 trading days apart, not 143, not 142, 144 trading days apart was the last low on the 50% level. The market produced higher top, higher bottom swings from 146. It's doubled in price and it's now somewhere around $330. So this very basic elementary system of looking for time and price and pattern are producing extraordinary winners. And all we've got to do is understand what this technique is and apply it. And you'll see it on any and every market. US Canadian dollar, again, we just looked at this, the 50% level where we said it double bottomed at the 50%. Shouldn't be any surprise then that the last major low that this market made in June of 2025 to this double top in November of 2025 is 143 calendar days. Now, the previous examples were trading days. This is calendar days. So what we're saying is that it could be 144 trading days, 144 calendar days, 144 weeks, 144 months, maybe not 144 years, but the number 144 is and of itself an indicator that Gann was using to find opportunities to place trades. If you have a look here, that major low that occurred in September 2024 to the next major low that occurred here in February 2025, 143 calendar days. Now, I will start looking at around 142 and I'll go to 146. If it's not within that window, then for me, it hasn't worked. And that's fine. I will look for something else. But if I see a reversal point coming in at 143, 144, 145, I'm on red alert because I know that that could present an opportunity. Now, I also have a software package called Optima, and they've done a specific Gann package. It's a brilliant package, and you can actually set it up so that it will do the searching for you and let you know when the time factor that you're looking for is coming close. So, for example, on ANZ, which is a stock I trade heavily, you can see through here that it's just alerting me that from this peak in May to this last low here, middle of September, is about 142 days. Time to get ready. Time to start looking for this market. If it takes out this top, then it's going to continue to run. You can see that from this significant low here in June, we had a warning of 142 days right to the very peak, the new all-time high at $39. And then, of course, the market fell down. Well, there was a ex-div, and so that did affect the price of the market. But it's being forewarned, and you can see that we're just looking at these things. What I'm looking for is the turn to come from a significant point. For example, this guy through here is a very small reversal point. I don't expect that to produce a major reversal. And as if you follow that track, you can see that it really didn't. It just didn't produce anything substantial. But a 144 count from this top or this low, I expect that to produce a sensational opportunity. So Gann continued on with his relentless research his whole life, and he continued to work into some really esoteric sciences, numerology, psychology, astronomy, astrology, geometry. He goes on to create dozens, and I mean literally dozens, of unique trading tools that incorporated some of these assets. In my opinion, the square of 9 is out of this world in the capacity it has to help produce warnings of potential tops and bottoms. It's a phenomenal tool. I'm not saying it's going to be an easy tool. It's not. But it's worth the effort to spend some time in it. So if you've got any material on the square of 9, I'd thoroughly commend you to keep working with it. But the number of things I've seen that tool has produced is extraordinary. Now, we can't go through all of these particular tools in one session. We just simply don't have the time. But what we are going to do is we're going to have a look at geometry and the angle that he created, which again, I find sensational, which is based on a 40-degree increment. So let's just have a look and see exactly what we're talking about. Again, back to Gann's May soybeans chart. And you can see the angles that he's got running through here. We're talking about equal time, equal price. So in other words, from a starting point, if we go 10 days across, we're going up 10 points from the starting point. 20 days across, 20 points up from the starting point. 30 days across, 30 days up from the starting point. And that, in actual fact, is a 45-degree angle, or it's a square. It doesn't look like a square on our modern software because the ratio of price to time is not even, but it is a 45-degree angle. So that's what we're talking about here when we're talking about Gann doing geometry on his charts. So what I wanted to show you here, this is Commonwealth Bank. And we know that Commonwealth Bank had a meteoric run up to $192. It staggers me to this day that I met some professional traders in Sydney who are shorting this all the way up. I still do not understand that. The rule that you must never break is you must trade with the trend. If you're shorting a rising stock, then I'll send you my email, please. I'll send you my bank account, and one of us will enjoy your money. The market must show you the trend or the direction or which way it's heading, and that's the way that you position yourself to take advantage of that market. A market is never so high that it cannot run higher, and it is never so low that it cannot run lower until it gets zero or delisted. What I've done here is just to show you a standard trend line, and typically we would have a point A and a point B, and then we'd have a point C. And all we're simply doing here is getting the anchor point, extending the trend line, and waiting for the market to then create a reversal or a support point. But we've got to have the anchor points. What Gann was doing differently was saying that markets have a balance. It's an underlying balance. Each and every market is completely different. I remember Alan saying that earlier. Each market has its own thing. It's got its own vibration point. And all he was simply doing was just counting. So what he did was to start from a major top or a major low and just draw an angle following that count down through here. Now, if you have a look at Commonwealth Bank, what you'll notice here was that on the 6th of November at the price of 178, within a couple of days, it's dropped to 150. This is what Gann called a market meeting its balance. It's time and price. They have converged. And let's have a look at the numbers. So the high date was 25 June, and the next low date was November 6. I want you to have a look at the range between the top and the bottom, which is 1343, and then have a look at the calendar days, which is 134. Now, at this point, it might be a little bit of a challenge, but what we have to do is ignore the decimal place and ignore any zeros after the numbers. So in other words, the first three numbers in time are 134. The first three numbers in range are 134. Or if you like, if it makes it easier, then this is dropping at the rate of 10 points per calendar day because of the price size of the market. But simply the numbers are the same, 134, 134. And from that point, Gann would have been shorting that market. One of the things he said, if the market tests a 1-by-1 angle and confirms it by reaction in price, it is a cinch trade. They were his words. So in other words, what he's saying is if the market runs up to the 1-by-1 line, and then the very next day the market opens much lower and breaks the low, he's short on the other side of that with a stop loss. So stop, for example, at 180. He's getting short at 176. 176 to 150 is 26. It's about, what, 15, 20 to 1, it reacted to the one by one. Time and price have balanced because the numbers are the same. Let's have a look at the Dow. And again, if we have a look at the Dow index from the COVID panic low of 2020, all we're simply doing here is drawing, again, 45-degree angle, and you can see that the market continues to rise until Liberation Day. And then that happened to balance perfectly time and price. The distance in time from the low is equal to the distance in price from the low. So if we look at the numbers, again, 1840, 1836. So forget the decimal places, and sometimes it's not going to be exact. I'm not expecting it to be 1840, 1840. It could be 2 or 3 or 4 out. It's neither here nor there. We're talking about 4 points in what, 5 years? 4 points in 5 years? But 1840 days, the market's 1836 down. And that is time and price balancing. If the market reacts to that, and it did, Gann's a buyer at 37,000, stop loss 36, call it 1,000 points. From 37 to 47,000, 10,000 points profit for a 1,000 point stop. It's a 10 to 1 risk to reward. And it's all because time and price are the same. They're the same numbers. You can see how close that got to that actual angle. It's very, very close. This is the British pound to the US dollar again. And I'll just stress again, billions and billions of dollars changing hands every single day. This is the weekly chart. From the top to this top here, which is in July of 23, it's 110 weeks. And the market's dropped 110 in price. 110 to 110. The numbers are the same. Time and price has balanced. This was a particularly good example because from the low in March of 20 to the same top in July of 23, at this particular point, if we just start a 45-degree angle running up, you can see that's 173 weeks and 173 in price. The numbers are the same. Time and price have balanced out, and that means that if that market creates any kind of reversal point, then Gann's going to short that with a stop the other side. And as you can see, this market fell down 1,100 pips in the next 12 weeks. In actual fact, surprisingly enough, this occurs a lot more than you might think. In fact, this particular setup here is what Gann called a death zone. If the market trades into that window where the lines cross, it's getting resistance from the top down and it's getting resistance from the bottom up. So that creates a major drift in the price of the market, and even a billion-dollar-a-day currency was not immune to Gann's work with geometry. I wanted to have a look now at the S&P 500. And of course, this, I think, is the most closely watched index in trading today. And what we're going to do is to bring all of these examples together and put them in and to show you exactly how Gann was doing it. I do want to stress these are not hard things to learn. It's not rocket science, but it is something you may never ever have experienced before, so it may appear illogical at first view. It just takes a little time to embed them and to understand them, and then it takes, more importantly, discipline and patience to wait for the setups to occur. So let's just have a look, and we'll go through and review the S&P 500. Now, as you can see, I'm going to start basically here from the COVID panic low 2020. This is going to give us some fabulous examples of these tools. First thing, we're going to put on the 45-degree angle, and we're going to be watching what the market does if and when it gets to this level. It might not get there for days, weeks, but possibly even years. But if it has a reaction there, there's going to be a very, very good potential opportunity if it reacts to that angle. Now, the S&P 500 continued to track north until January 2022. If we have a look at the chart, without any tools, signals whatsoever, you should be able to see that this market is now starting to lose steam. It's coming off. It's had a very, very good run, and it's been up since 2020 low. So the next thing I'm going to do is to put my Fibonacci retracement tool on it, and I'm going to watch to see what the market does. Now, this is a weekly chart, and there could and will be opportunities for shorter term trades bouncing off these fabulous Fibonacci levels. But you notice here that the 1 by 1 line crosses the 50% level at 3,500. A little bit of an interesting thing coming up. Let's watch this. In October 2022, after a severe decline, the market touches the 50% level and the Gann angle. Now, Gann told us that if the market reacts to the 1 by 1, the 45-degree angle, it is a cinch trade. You must put a trade in place, put your stop loss underneath it, and sit back and watch the market move. It's also got the 1 by 1 and the 50% together, and it is right there. We're talking about 3,500 in price. Now, what I also do is to keep a track on the numbers and the ranges and the time factors between the numbers and the ranges. How long did it take to get there? How far did it run? What we had from low to high was a rally of 2626. What we had from top to bottom was a pullback of 1327. And that makes sense. 1327 times 2 is 2650. So we're very close to half of the upward range. That's what we would expect. Now we're looking for the market to show its hand. And Gann's already long, well and truly by this stage, anticipating that this market should rally. And the market continues to rally. And as you can see from that low, where it got time and price and its vibration at the 50%, it then put in a double bottom low at the Fibonacci level, and that would have been a cause to add to an existing position. It continues to move north, comes back, and you can see now we're getting very, very close to the 45-degree geometric angle. The important thing to remember here is to keep the angles up to date. As the market progresses, make sure that you're extending these tools out on your chart so you know where these important levels are. But you can see through here now that this paid off handsomely. And it depends on, obviously, the time that you want to be in the market and how long you want to hold a position. But there was a winning position there, I think, whether you're short, medium, or long term. Let's continue to progress. And you can see now the S&P breaks through the previous top until February 2025. And in February 2025, we're getting around the 6,000 point mark. And you can see again, just like we saw here, there's a sign of exhaustion in the rally. It's higher top, higher bottom swings. It's running. Now, all of a sudden, we're creeping sideways and we're taking out weekly lows. This is a signal that this market is now probably due for some kind of correction, some kind of a pullback. But we want to be a little bit more definitive than gut feel. If we take a price measure from that low to the tops, the range in distance is 2636, and the previous run up on the S&P before it had a 50% pullback was 2626. We've repeated the same price rally from low to high, from the next 50% low up to the next high. What are the chances that it does a 50% pullback? I think the chances could be very, very good. But all I simply did on this next slide is I took the Fibonacci tool from this low to this top, And then I duplicated it and added it to this high going up to give me a clue about potential support and resistance levels in the future. So you can see now it's telling you it's at the 50% of the previous run up. This is why Gann's saying you must know where your halfway point is in your rallies. And you can see through here now that this market starts to really start to decline. Then we got Liberation Day. Thank you, Mr. Trump. That occurred in the week of 11th of April, and look where the low is on the S&P 500. It is sitting on Gann's 45-degree geometric angle. It's not exact. It's only a couple of points. In a market trading at 5,000 points, it's irrelevant. But what you can see has occurred is that the market's now pulled back 1,312 points, and the previous pullback was 1,327. So there's symmetry everywhere if we know what to look for. And now that we can see that the market's sitting on this low, once it starts here, remember Gann was telling you, if it reacts to the one by one, it is a cinch trade. This was very, very close at this point. But this is on the line. Gann's buying that at 48.20, probably a stop loss, let's say 100 points. At 48.20, he's buying that market, and it's up to 6,800. That's 2,000 points profit for a 100-point stop loss, because he recognized the vibration of time and price being equal. Keep the angles up to date, keep the data up to date, know where the 50% levels are, and know where the angle is, and it represents a fabulous opportunity. As I said, you'd be surprised at the number of times this repeats on any and every market you look at. I've never in 30 years seen any chart that does not have a 144 reaction. It does not react to the 50% level and does not react to the Gann 45-degree angle. I've never seen it. If you find one, please let me know. You won't find it. These tools are just sensational. So we've had a look at what I wanted to show you today to give you, I hope, some interest in what this fabulous trader was doing pre-computerization. All of this stuff that we looked at took him years and years and years of dedicated work by hand to figure out these fabulous things. I've only scratched the surface here. I haven't gone anywhere near in detail on any of these tools. This is just to show you that it is possible to do. Now, the last thing I wanted to have a look at was the forecasting. And I'm going to be quite honest with you out there and say that I personally have not seen anyone who has replicated what Gann did. He produced yearly forecasts, sold them to traders, and that's why Wyckoff sent his detective to find out if this was all on the level. But the forecast method that he did, I think I might have found it, but I'm not prepared to release it because I've still got a lot of work to do to confirm my own mind that it is working. But this is what I did at the beginning of this year on the S&P ASX 200. What we're looking at here is the daily bar chart for the XJO. That's the market price. The green line that you're seeing is a forecast line. It's not to scale. Okay, so ignore the prices on it. All this forecast line is telling me is where the market should have reactions in time and in price, and it should follow, as a rule of thumb, this general direction that the green line is taking. This is a historic market pulse, and it comes from taking the data on the XJO and going back as far as you can, 20 plus years, and figuring out the little clues that Gann left behind. And I'd have to say, to be honest, that I think that's been a pretty good forecast. It's worked so nicely. I'm really, really excited with this because, as you can see, it's just telling you when the market should have a pullback, where the lows will come in, the next direction of the campaign of the market. We should have a peak here, and we did. We had a slightly smaller pullback here in September than I was anticipating. I thought it might be larger than that. But then in November, I thought we would have a smaller pullback, but we've had a larger pullback. So I don't expect exact precision. What I am looking for is a rule of thumb that tells me what the market could do based on historic precedents. And as we can see here so far, it's been pretty good. Now, whether it maintains that, we will just have to wait and see. And following on from the discussions we had earlier with some of the other markets, the Australian market that I've produced this forecast for, and I'll be really keen to see what this does. It looks like at this stage that the Australian market is going to continue to rally, and I'm expecting it to continue to rally up until the end of March of 2026. At the end, or middle to the end of March 2026, I'm expecting a minimum 10% correction in the price of the Australian stock market. I would not be surprised to see the Australian RBA raise rates at the March-April meeting. That's what I think is going to happen. They're already putting it out there. If you listen and read the comments they made in their last outward meeting, they're already preparing us for it. And I think this is just basically confirming that we should see a rate rise in March or April next year. And then again, it could be completely wrong. I'll still be trading the chart, I'll be trading the patterns, I'll be trading the signals. But this is just one of the things that I love to do, which keeps me occupied during the day. And it allows me to spend more work doing the things that I love doing. So that's basically what I've got prepared for you today. As I said, a lot of stuff there. And I hope that what that does do is it gives you an inclination to perhaps delve more into the Gann material. There's stacks and stacks of stuff on the web. I think these days you might even be lucky enough to be able to download PDFs of his books. There's a lot of material out there. For those people who want a more dedicated education service, I've produced videos on the Square of Nine, the astrology work, and you're welcome to go through and have a look. If you have any questions, again, you're welcome to send them through. I also produce free weekly reports on YouTube, which come through to help people with this sort of stuff. So what I'll say there is I hope that's been of some value to you, and I hope it's been of some interest to you. And I'll just sign off and say thank you so much, and wish you all a great Christmas. And we'll see you again very soon.
Excuse me, Alan, can we ask you any questions, please?
Absolutely. Go right ahead.
My question is, which Gann book would you recommend a Gann beginner to start reading?
Oh, is that you, Paul?
Yes, it is, Alan.
Yeah, Paul, thanks, buddy. Mate, the first book that I would recommend everyone to read is 45 Years in Wall Street. Now, it was the last book that he wrote, and by that stage, it was very, very late in the day. So I think what you'll find is that he basically realized that there was no point coding it to any great degree, but his writing style was much, much better and much more fluent. So I would definitely start with 45 Years in Wall Street, and then any of the books after that will be fine. There will be a challenge in getting the data for the charts that he's talking about. There are charts within the books, but absolutely 45 Years in Wall Street, absolutely.
Yes, Margaret. Margaret C says, brilliant. Thank you, Alan.
No, you're very welcome, guys.
Any questions here?
While we wait, while we wait for the question coming in the room, there's a question online. Is there Gann software we can apply to chart software?
Yeah. Look, the best software package I've seen, and I still use it to this day, I've been using it for well over 10, 15 years now. It's a package called Optima. That's O for Orange, P, T for Tom, U, M for Mary, A for Adam, Optima. And Matthew Vidal is the owner of the company, and he's pulled no stops to produce a fabulous software package. It's head and shoulders above anything else. It's got all of the Gann tools in it. So when we start talking about the swing charts and the Gann angles and all of Gann's other square of 9 tools, all that sort of stuff, they're all there. And the important thing is that they're correct. I've seen a couple of cheaper programs that, unfortunately, the results are not true. But Optima is absolutely the best software package, and I thoroughly recommend anyone who's looking for it to check it out and go through and have a look.
Yeah. Hi, Alan. My name's Joe. I have found this a great meeting. Thank you very much. The question on that 45-degree angle you drew, I think it was for the S&P 500 or the Dow Jones.
Yes.
I presume as you go right along the x-axis, you got 1 point per day, or is it 10 points per day, or is it 20 points per day? Really, I want to know how you arrived at the 45-degree angle on that particular chart.
Okay. That's an excellent question, actually, and it's something that I should have mentioned earlier. The thing that we have to remember here is that in Gann's day, he was talking about stocks trading at $65, $68, and stocks were trading in eighths and thirds. Unfortunately, today, when you look at the Dow Jones index, it's trading at 30, 40,000. You're looking at the Hang Seng. These markets are, Bitcoin, for example, trading at $100,000. So what we need to do is to remember that we're only, and it depends whether you're looking at a daily, weekly, or a monthly chart, because you can have the angles on all of the time frames. But what you need to do is to adjust the decimal place for the price to make the angle worthwhile. So if I had 1 point per day on the Dow Jones index, it's going to take 30,000 days for that angle to catch up to the current price. So that it's totally worthless. So what I'll do is I will look at a market for the Dow Jones, for example. I'll start at a point and I'll go up one day, but I might be going up 10 points per day or 100 points per day, so that the line creates a visual 45-degree angle. Otherwise, there's no point in putting it on there. But I never, ever do anything except move the decimal place. So I wouldn't have 20 points per day or 25 points per day, 60 points per day. It's always 1 or 10 or 100, maybe 1,000 if you're dealing in a massive market, but it's usually 1, like for a stock would be 0.01. If you were looking at the stock for NVIDIA, what you might find is that you've got to make it 0.1 and multiply the price multiplier by 10, or move the decimal place so that the 45-degree angle is cutting through the prices of the market. Otherwise, there's no point in having it on there. But thank you for that, because that was a question I should have answered earlier.
Any other questions?
Yeah, g'day, Alan. It's Keith Mundy here.
G'day, Keith.
Alan, as you know, I've been studying your courses for many years, and I look at your weekly videos. I look at all of them, and I attend your monthly Zoom sessions, and I reckon they're fantastic.
Thank you.
How would you explain to someone who says, look, Gann did all of his best work in the 1920s, and how can what he says be relevant today? I mean, it's new markets, everything's new. How could you use the theories and strategies he used?
Absolutely. And look, I get that a lot. And at the end of the day, if you have a look at the Bitcoin chart that we looked at today, the 4-hour Bitcoin chart, and see the amount of profit that you could have made from the 50% level on 3 charts in the last 2 to 3 months, that's Gann. That's pure Gann. The 50% level, reacting to that. If you start doing time counts, the Euro US, for example, you put a fan angle on that and you start looking for the number 144 time counts, and they're everywhere. That's Gann. The euro did not exist when Gann was alive in 1955. It was another 50 years down the track. And yet, those tools that he created are creating fabulous opportunities for those of us that are prepared to be open-minded and to go through and do the research. It's one of those things. I've been to conferences where, and I know Gann was using planetary cycles to create opportunities in the markets. And you start talking to some die-hard traders and you start discussing planetary cycles, and their eyes roll in the back of their head and they're off to the bar. But the thing is that what we have to do as individuals is we owe it to ourselves to actually do some research and say, no, not for me. And that's fine, because there's 1,000 stock market tools out there that I don't use. It doesn't suit me. And everybody's going to have their own particular thoughts on trading and tools and so forth. But all I can say is that if you're prepared to put in a little bit of effort to go through and do the research, I know you will be amazed at what these tools produce. It has blown me away. And even 30 years later, I still just shake my head. Like the British pound chart with the 144-day count on it. I see that on a weekly basis. It's just absolutely stunning. And it is there. And it is up to us then to say, well, yeah, okay, I'm going to put a little trade on and I'm going to see how this one goes. Keep working at it. But I know, as a matter of fact, these things work because markets are traded by human beings. They always have been, irrespective of the algo robots. They always will be traded by human beings. And they're going to create opportunities if we put the work in to learn these fabulous tools.
Thank you very much, Alan. That was excellent. Any final questions? On behalf of everyone here in Melbourne, ATAA chapter, we'd like to thank you very much for what was highly educational and highly interesting. And on behalf of everyone that's tuned in online over Australia, I'd like to thank you on their behalf as well. So thank you very much, Alan.
No, you're very welcome, Paul. And Merry Christmas, everyone. And hopefully we'll catch up in the track soon.
Looking forward to it. Thanks, Alan.
Thanks, mate. Bye.